You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com. You wanted it, you got it. A radio program that helps teach you options trading inside and out, basic to complex. This is Options Bootcamp. Whether you want to learn how to protect your portfolio, generate income, or even become a master of volatility, the Options Bootcamp drill instructors will break it all down for you. Now, let's get you into peak options trading shape. Here are your Options Bootcamp drill instructors.
All right, everybody. That music means it is time once again for Options Bootcamp, the program for you. The busy, maybe you're a basic retail guy, maybe you're just dipping your toes in. Maybe you've gone a little bit beyond that. You're a little bit more advanced, but maybe you don't like how it turned out, or you just want to arm yourselves with better tools, better weapons for the options market. Either way, we've got you covered. My name is Mark Longo from theoptionsinsider.com. As well as, of course, from this fine network upon which so many of you have been just gorging yourselves these days. You'd love to see it. Keep it up. Keep those comments, keep those reviews coming as well on your platform of choice. If you like what you hear, it helps new folks continue to discover this program. And in these markets, it's more important than ever. We do love to hear from you guys. Don't send the questions, though, on like the iTunes comments or whatever, because we don't check those as often. So you want to have a timely question, you want to answer it on the show, you know how to find us at Options, most of the major social media platforms. Our website, theoptionsinsider.com. Questions at theoptionsinsider.com also works, or carrier pigeon. That'll get to us as well. All right, and joining me on the old program today, my old friend, my compatriot, the black-hatted one himself, Mr. Dan Passarelli, a market taker mentoring, and the author of multiple seminal options tomes out there, including Trading Options Greeks. Mr. P, welcome back to the Options Bootcamp Drill Instructor Proving Ground, sir.
Well, it sure is swell to be back.
Well, you sound overjoyed. I like it. Your enthusiasm just drips from the microphone, sir. I like it. All right, let's do it. Let's get down to business. It is time for your basic training.
All right, Boot, it's time to get in line. What you're going to do is learn. You're going to learn how options work. Do you hear me? You're going to learn options trading inside and out, basic to complex. There will be no failures. Do you hear me? Pull in, prepare to learn.
All right, everybody, welcome to Options Bootcamp Basic Training. This is, of course, the portion of the show where we break down some basic options topic and explore it in a little bit more detail, explain how you can use it in your own options trading. This is another one. Today's episode, yet another one coming at you courtesy of our friend there, Mr. P. He's digging deep into his bag of tricks over there. A lot to parse. We're going to get to all things volatility around earnings. But before we get to that, Dan, it's been a little while since you and I have had a chance to gather here together on the old Options Bootcamp Drill Instructor Proving Ground here, sir. And we've seen a lot of pretty much the same thing we saw last time you and I gathered here together. Market continuing to mostly rally and vol continuing to come off. Coming into this show, at least, we're seeing the S&P about 3260 or so, and our old friend VIX Cash about 2470 or so. So shy of the 25 handle. So Dan, with that bit of place setting there. What are your thoughts, if any, on what we've seen over the past couple of weeks in the market here since the last time you and I chatted, sir?
Mark never tried to figure out the market. It is a fool's errand. Yeah, I mean, Jesus Christ, man, I don't know. I think when, we were just chatting about it before, if ever there is like a vaccine or something and like everything's fine, maybe that's the time to sell it. Buy the craziness and sell the reality.
Yeah, it's funny. I often think the opposite. I think once we have a firm vaccine and it's out and it's tested and it's in the public and it's being distributed and no one's dying in mass from taking the vaccine, that's at that point, you almost got to buy this thing, right? Despite how ridiculously overinflated it might be, because it's proven to be just a vampire, a zombie, a werewolf market. You can't kill it. It just comes back stronger. A pandemic can't kill it. The government has shown it will step in. It will backstop this thing. The Fed put is truly in place, or perhaps the government put, depending on how you look at it out there with the stimulus spending. Either way, they will backstop it. So if it does get wounded mortally, they'll just give it a little dose of smelling salts, and it'll be right back to business out there. Speaking of back to business, let's get down to business here on the old basic training. Dan, it's that time of year. It seems like we just finished the previous earnings season, but we're back into it. We're back into earnings season. A lot of people have a lot of questions about volatility around earnings season, and so it seems like a good time to dive into this topic. By the way, listeners, if you do have questions, you want more data, more insights into exactly how volatility is shaping up and breaking down across the earnings season, and we have a treat for you over there at our website. Yeah, I know a lot of you like to listen to the show. We have a website too, theoptionsinsider.com. If you go there, click on the Options News and Articles tab, you will find some great earnings move and earnings move results and earnings season analysis reports, courtesy of our friends over there at ORATS. Matt's been on the show in the past, and they crunch all the numbers. They do all the analysis for you. So you want to see how much volatility a certain name is pricing in, you can do that. If you want to see how much volatility and how much movement they've actually generated in the past over a certain amount of time, you can do that as well. If you want to see how the entire season is breaking down, you can do that. If you want to see how they've performed after the earnings came out, you can see all that stuff. And it's all free. You can't really beat the price. And it all came about because I basically gave Matt a hard time. I said, hey, everyone wants this data. No one's producing it. You have the data. Why don't you crunch it? And so I guilted him into making these great reports for you. So you guys should check them out over there, theoptionsinsider.com. You can't beat the price. Completely free. That said, Mr. Dan, I know you guys over there in Market Taker Land have been talking a lot about trading volatility around earnings season and some of the interesting strategies you could take during that time. There's a lot of different approaches to it. I'm curious, kind of walk us through what the MTM approach is to earnings season and some of the ways you like to view volatility and indeed some of the trading strategies you like to utilize around this time of year, sir.
Yeah, Mark, there's a lot that you can do with earnings, but I think it's really important to sort of simplify it and systemize it. I found remember back when we were like on the trading floor and such, and like the folks, like the traders who did like really niche stuff, like a little bit more cerebral and, like maybe some quantitative traders or people who trade these models, like it takes a little bit to learn all that stuff. But once you do, like there's no competition and it's just really easy to make money. Like the more complex something is, the simpler it is when it comes to option strategies. And that's exactly what it's like with earnings trades. They're not very complicated. But like once you learn how it works once, you can just systemize it and keep it rolling.
Well, you guys have a lot of different systems over there at MTM for how people can trade earnings. Again, I encourage you, folks, check it out if they haven't already. MarketTaker.com is the place to go to dive into this in a lot more detail. Maybe we'll start with your baby there, Dan, the Greeks, because I know you're a big fan of all things Greeks. And indeed, VEGA, you did write the book, or one of the books at least, on the subjects. Maybe we'll start there with a little bit of a dive into vol around earnings time and what people can expect from it, and indeed our old friend VEGA around this time of year, sir.
Yeah, so VEGA is the Greek that measures how much your option price changes when implied volatility changes. Really, really useful stuff, especially when it comes to earnings trading, because here's the nuance of earnings trades. These days, anywhere from a week to 4 weeks leading up to earnings, you see implied volatility rise. That means the options get more expensive, but they don't rise across the board. They rise a lot more typically in the front expiration, the shorter term expiration. And so because of that, that promotes a few different strategies that lend itself really, really well to that. One of them is a time spread. And by the way, please, whatever you do, don't just hear that I said time spreads are good for earnings and just go trade time spreads on every earnings. You will get annihilated. That's terrible. Certain criteria has to be met. But when it is, man, time spreads can be super great trading earnings because you're selling when the criteria are met. You're selling overpriced options and you're buying, relatively speaking, cheaper options. And when you get the vol collapse, that works. And there's a little bit of nuance there. You have to look at the Vegas of both expirations and sort of model a partial reversion to the mean vol crush relative to historical volatility. But using Vega to measure that volatility change is super helpful. And the same goes for straddles. Before an earnings announcement, like I said, the straddles, all options start getting more expensive because implied volatility goes up. And a lot of times, straddles are just way priced out. They're way too expensive and it'd be kind of foolish to buy them. But when you do a volatility analysis and model a volatility crush and use Vega to see how that would affect your straddle price, it's basically the only tool you need to make a really, really informed decision on a potentially super powerful trade.
I'm glad you mentioned the vol crush because that's a trap that catches a lot of people, particularly new people in the options market. I've lost track of how many times over our decade plus of doing this, at least on the network and on their website. That show hasn't been running for over a decade, though sometimes it seems like it. But in general, people come in and they get this email all the time. Hey, I bought XYZ calls before an earnings event. And then the stock went up after the earnings, and I got clobbered on my calls. I lost 30% or 50%. And that kind of gets back to what you were just alluding to, Dan, which is that vol crush. And I've often used the analogy of a balloon. Think of volatility going into earnings as a balloon, and the vol is the gas going into helium going into the balloon, and it's filling, and it's filling, and it's filling, and it's getting juicier and more thicker and much more stretched out as the volatility event is approaching. And then when that event finally happens, it's like that pin goes right in that balloon. And barring some extremely unanticipated event or some crazy outcome of earnings, that balloon is going to pop. And that vol is going to come crushing in, and all that extra juice, all that extra premium that you paid for those options is going to come exploding out of that balloon surprisingly quickly if you're on the long premium side of the fence. So you don't want to get caught holding the bag there. Now, the flip side of that, of course, is, then I should just always sell premium going into earnings. And no, that's not the case either, because you see it every cycle. You might win 7 out of 10 times, whatever the case may be, but the few that miss, they miss big. And when that happens, you're wearing it for all the other trades that you put on the short premium that you may have made money on. In fact, all the data, and I've actually had the folks at ORATS, I've had them crunch these numbers for us, and they do it every cycle, time and again. And all the data comes down to, effectively at the end of the day, trading earnings vol, just going out willy-nilly. People always ask us, should I buy premium? Should I sell premium? No matter which way you go, there's no meaningful difference in terms of profitability. It comes out close to a coin flip, about 50-50, no matter which way you approach it, short vol or long vol, because the losers of the short vol make up for all of the winners at the end of the day. And you're going to have some losers. Look at any earnings season. You see a few crazy outliers out there that ruin it for everything else. So that's the mindset you have to have coming in. Trading earnings is a bit of a crapshoot. A lot of the pros don't like to do it. They recommend you avoid the earnings event itself, trade around it before or after. But still, a lot of folks like it, so we're going to talk about it here on the show. Dan, this leads me to another very popular question we get here on the network all the time, which is, should I put my earnings trade on and should I hold it through the event should I take it off before the event, or should I maybe leave it through the event and take it off after? Should I take it off the day of the event? How do you guys like to structure your earnings style trades? Are you a pre-event, post-event, through the event? What kind of guy are you over there, Dan?
Yeah, so we have a very, very specific methodology for trading this. In fact, this is our most structured class. We totally systemize this. We actually call it our total earnings domination. I guess, should I tell the folks where they can read about it?
Sure, go for it. Why not?
Yeah. Okay. So you can just go to markettaker.com/dominate. That's markettaker.com/dominate. And that will actually take you to a web page that tells you what the system's all about. And there's a special discount for select groups. And you guys are part of that group. So please feel free to take advantage of it. But you'll want to do it quick. Our next live class starts July 27th. Now, all that said, to answer your original question, Mark, the total earnings domination system is held through earnings, but it's less than a 24-hour trade. It's the shortest trade that I set out to make. My time horizon is typically between 3 days and 3 weeks usually, but this is less than 24 hours. Put it on the day before, take it off the day after. There's just a little bit of modeling, which could sound intimidating, but it's super easy. I mean, if you have a option-friendly brokerage account, it's just a breeze to do. And all it is just following this checklist. So yeah, put it on the day before, take it off the session immediately following, and you get the timing right and you follow the steps. It's super easy.
Super easy. I like to dominate things. That sounds kind of fun, Dan. Maybe I'll have to check out your course over there. Now, another approach people like, and this is an interesting one, I'd be curious to get your thoughts on this as well, is people come into this and they look at what I mentioned before, my balloon analogy, and say, oh, this implied vol is coming in, it's coming in. So that means it might offset some, or potentially, if I'm lucky, even all of that dreaded decay factor I may get. So some people like to come in a few weeks before earnings, maybe a week and a half. It kind of depends on the name, how far out you want to go. Week and a half to 2 weeks, somewhere in that time frame, put on a long premium trade, and then take it off the week of earnings, maybe a day or two before the event itself. Because what happens is usually, like I said, that vol creeping in tends to offset a lot of that decay. So what you end up getting is a low cost. I won't say free, because that doesn't always happen, and I don't want to promise you something that won't occur, but a lower cost swing at the bat in XYZ underlying. So if you have a nice, decent move in the underlying, you could capture it, and it's not really costing you much to sit at the table during that time from a decay perspective. Now, the trade could obviously go against you, and that could cost you, but from a decay perspective, you're mitigating one of the biggest risks of owning options out there. Dan, what about your thoughts on that approach of kind of getting that, let's say, low-cost swing at the bat pre-earnings, sir?
Yeah, I mean, I've looked at that. I will say that the jury's still a little bit out. I've actually got one of our students testing that out right now, and we communicated about it in our chat room. But I will tell you that people have told me that they've done this in the past. I remember, like, even about 4 years ago, there was a guy who's like, yeah, this is all I do. I buy options 3 weeks before earnings, and the volatility goes up, and I dump it right before earnings comes out. Oh yeah, it's a total breeze. And I was like, all right, a little skeptical. And then, like, I talked to him 2 months later. He's like, yeah, no, I don't do that anymore. So I think doing that is possible, but I think it's tough to make work.
Yeah, you have to have a kind of unique environment where you have to have the movement during that time to make it worth your while to put the position on. If you're just decaying less but not getting the movement, then it's not really going to work for you. So yeah, that's one of those trades. But also on the flip side of that is people who like to aggressively harvest premium heading into earnings a few weeks out, let's say. That also is challenging because you're not seeing a lot of that decay happening out there. So that's what makes earnings such a crapshoot of an environment at the end of the day, which is why those reports we generate for you guys so helpful. If you're not going to listen to our advice, if you're maybe not going to avoid earnings trading altogether, which is usually the way a lot of sane people like to do it, because it is the end of the day a crapshoot. You don't really know what the heck the company is going to say, particularly now. No one can give really any meaningful guidance. So it almost is literally a crapshoot what the heck's going to happen to the stock and what they're going to say afterwards. So in these environments, probably is judicious to back off a little bit. But if you are still so intrigued, there are ways you can approach it. Dan, my ears perked up earlier on when you mentioned one of your interesting approaches to trading earnings season. We talked about time spreads a lot, so I won't get into that one right now because I know if the second I mention time spreads, all the questions are going to start flocking in, and we'll be here for 3 more hours. But in general, straddles. As we kind of joked earlier in this year around the March timeframe that, look, buying straddles actually worked. It's paying off. That's because the markets were so insane. They were so topsy-turvy that pretty much buying premium almost in any respect really kind of worked out over that time frame, which, again, maybe shows you what kind of market you need to make straddles pay off. But you talk about straddles as your approach to earnings. What is your use case for straddles, and how do you like to use them around earnings season, sir?
Yeah, earnings, they're tricky. Straddles with earnings, I'd say about 95% of the time they're priced out. And if you're holding it through earnings, looking for that, big, like they missed to the upside or the downside and just looking for a big move, I'd say 95% of the time they're a bad idea, but the 5% of the time that they're a good idea, they can be a great idea. But, again, it's just doing the volatility analysis. And I'll piggyback a little bit off what you were talking about a couple of minutes ago. I will say that predicting direction, to be fair, predicting the direction at any time with any stock is very, very difficult. Predicting direction during earnings is impossible. I have never once met anyone who has successfully been able to predict direction with earnings. But predicting how volatility will react, that's not only not impossible, it's almost easy, once you have a basis in it. Once you really follow these things, like our students do, it behaves like almost exactly as you think it will most of the time. Like I just have our students fill out like a Word doc, get out a pen, paper, and a calculator. I imagine I can systemize a little bit, but you would be shocked and amazed at how predictable volatility can be around earnings season.
Yeah, it's an interesting subject. It's one we could spend many hours discussing here on the program. Again, if you want the hard data, theoptionsinsider.com, click on those options news, or I should say earnings news, earnings move results, and earnings season analysis. If you want the hard data on all these different names, then they crunch hundreds of different tickers for you out there, including most of the big ones you guys like to trade, your Apples, your Teslas, all that good stuff out there. Again, it's all free, so it doesn't cost you anything. Kick the tires, like the fires. Maybe you'll learn something about how a name has performed that you didn't really know about before, or maybe you'll see a pattern developing that you didn't see. Either way, again, it's data that, until I twisted their arm over there to do this, was really only crunched once before, close to a decade ago, by a Goldman study, and that was about it. And for such a popular topic, which is how volatility performs around earnings season, there is a high demand for this, and yet there's not much available unless you are a large client of a major investment bank and can get access to some of their proprietary research. But there you go. We make it easy and free. We democratize it for you over there. So again, earnings season, bit of a crapshoot, difficult dance. But if you have some knowledge of how options work during this period and you want to dance with the devil, there are better ways to do it than others. Mr. Dan, any final thoughts here on earnings volatility before we rotate in a few quick listener questions?
No, just that I feel like it is the most promising trade you can make because of the volatility predictability, and because, once you just follow certain criteria, just how easy it can be. And the important thing is that there's no guessing to it, no guessing anything. It's really super scientific, and I use the analogy all the time, including on the show, you are being like the casino, not the gambler, when you're when you're trading with a statistical advantage, which is like exactly what you can do with earnings. So I'm a huge fan.
All right, we're a huge fan of you guys, so let's see if we can squeeze one of you guys on really quickly for a real quick mail call.
Mail call. Time to look at questions submitted by our listeners.
All right, everybody, let's see who we got here. We got Elliot up first on the old mail call. He says, good hit on trader psychology. I believe he's referring to our last episode. He goes on to write, I think I've definitely grown in my ability to handle losses since I first started trading options. Where do you think you guys have evolved the most in your psychological approach to trading? Well, that's a long discussion for another day as well. I think starting off on the trading floor like that and having to, make your nut back every day, having that sort of Damocles looming over your head. You had to cover your seat lease, you had to cover your commissions, you had to cover your clerk salaries, and maybe a draw for yourself and office space, all these things. It worked out to thousands of dollars a day that you had to make just to break even. So that had a lot of churning and burning and grinding associated with that, which kind of wears on you a little bit. It's kind of what I alluded to earlier about maybe keeping your day job if you want to turn professional trader, to keep that psychological burden from weighing too heavily upon you. But I'd definitely say, in hindsight, looking back, one of the approaches I have now, we see a lot of people coming to us and they're always like, oh man, I got to get in there. I got to trade. I got to make these trades every day. I got to do this. And they feel this rush, like this FOMO effectively, which I hate to use a cliche, but this fear of missing out on the great trade. And I think a lot of pros, after a while, they realize, you know what? There's always going to be a great trade. And if you miss one, yeah, that's not good, but there will be another great trade. There'll be another great setup out there for you. So maybe that is probably one of the better lessons I've encountered over time, is that you don't need to go nuts every day capturing every moment, because there will be other moments out there. A little more patience, probably a healthier way to look at your trading overall. Dan, what would you have to say here for Elliot is how have you evolved the most in your psychological approach to trading, sir?
Oh, boy. Yeah. Actually, I mean, I love your answer. I mean, I can paraphrase part of it. Just that patience that like you don't have to trade all the time, and it's very, very difficult to wait for that perfect setup. Like John Komisik, who's our head coach, like he likes to quote, there's a Jim Rogers quote, wait until you see money lying in the corner, and there are times when, you might find a couple of really solid, great trades a day. And then there's sometimes where you go 3 days where it's like, no, I got nothing, So just don't rush it. Don't force it. Let it come to you. But I'm going to tell you, man, I appreciate that it's not easy. It's not easy for anybody,
It is not easy indeed, particularly if you have that sort of Damocles hanging over your head. You got to make that money every day. That's when it starts getting challenging. That's when you start getting into perhaps over trading scenarios. Unfortunately, that music means that's all the time we have for the mail call today. It's all the time we have for this episode of Options Bootcamp. But before we go, Dan, you kind of mentioned your earnings domination. If folks want to kick the tires on that, where should they go? What should they do, sir?
Yeah, we actually have like an incredibly sweet deal going on right now. Just go to markettaker.com/dominate. And that's the webpage that explains it all. And we actually have like a 93% discount going on right now. So if you're looking to trade earnings, you get in for like a tiny little investment. And I will tell you, this is a technique that you can use the rest of your life, and it works. It works great.
93%. It only cost me 7% to do this. That's a bargain. That's a Black Friday in July type deal. Check it out. Market Taker, 2 T's, remember, .com is the place to go. On behalf of the Black-Hatted One and indeed myself, I want to thank all of you out there who continue to download and stream this show every week. We love you all. We're going to feature a bunch more of you in the next episode. We'll be back then with more Options Bootcamp.
You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/The Options Insider, or via questions at theoptionsinsider.com.